Welcome back. It's part 2 of the Magic Formula series. You don't need to watch part 1 unless you have no idea what the Magic Formula is. Anyway, I went through the top 15 out of 30 Magic Formula stocks just by alphabetical order, and now I'm going to go through another 15, and this will just be the bottom half of the alphabetical order. Not in any way, shape, or form saying that these 15 are better or worse than the other ones. It's just, like I said, alphabetical order. Okay, so last time we ended on Medifast, and so we'll go to Ocuphire. All right, so looking at Ocuphire, 1 year, holy cow, up 100%. Like I said, I know I hate doing this, but if something's already run up like that, I'm just hesitant to buy it because I feel like I kind of missed the boat, right? But that's not always the case, right? You can have something that's going to be a multi-bagger, and if you get in at 2x and it goes up another 5x, then you still made a lot of money, right? Anyway, okay, they are a clinical stage ophthalmic biopharmaceutical company focused on developing and commercializing therapies for the treatment of refractive and retinal eye disorders. Okay, so it's an eye pharmaceutical company. Eye drops, preservative-free formulation. Okay, these are a lot of big words, but it's another pharmaceutical company. Look at these revenues quarterly. That's so weird. Let's see. What's their annual revenues? Let's see. Let's look at GAAP earnings per share, and we're going to look at annual. Okay, so we have like very little to go off of here. I'm just going to look at their balance sheet real quick. So they are a $85 million market cap. Ooh, that's a tiny company. Okay, got to be careful what I say here. So anyway, the balance sheet, so $85 million market cap. They have $45 million in current assets, almost no long-term assets. Let's see, like no liabilities. Really interesting, but you'll see this with new companies. New companies, they just had an offering. Probably, I'm inferring a lot. One of the things I wanted to do with this video is go in kind of blind with these companies. So anyway, like new companies, they have a public offering, so they raise money via shares. So you're not going to see, a lot of debt at first. But let's see. Let's look at their quarterly cash flow statements and stuff. Negative income. God, this one's tough. This just seems like one that you're going to have to know the company better to get a better understanding. I mean, the free cash flow is negative. I'm staying away just because it's one of those like too difficult, but I could see, if you want to dig down further. I mean, it's on the list for a reason, right? It's on the Magic Formula list for a reason. All right, let's go to the Magic Formula, and then we'll look at PARR, Parr Pacific Holdings. All right, another one that's run up big for the year. They are a energy and infrastructure. They own and operate energy and infrastructure businesses. They operate through 3 segments: refining, retail, and logistics. Okay, this is up my alley, right? Ultra low sulfur diesel, gasoline, jet fuel. Okay, that sort of thing. Interesting. I think that they probably have some really good tailwinds right now. If they're in that industry is doing really well. That's kind of the one I work in. So let's see. Let's look at. You know what? I'm gonna go look at their earnings per share. Okay, revenue on an annual basis. We don't really care about revenue. Some people look at price to sales. I think that's kind of a waste of time. You should pretty much strictly focus on either earnings or cash flow, right? Preferably cash flow, but earnings are usually just easier to access. All right, so estimates are figuring them a little bit above $1 a share, or that's quarterly. So let's say what they're saying for annual. Annual, less than $4 a share, about treat fitty. And currently, they just had a huge year. I mean, look at that. They compared to what they were doing, they were plus or minus $1, $2 a share, minus $4 there, but then made close to $8 a share. So if they're making $8 a share on a yearly basis, the stock is worth probably like 60 to 80 at least. But if they're projected to make closer to 350, I think they're kind of fair here. But I think this one is one to look into. It's pretty interesting to me. All right, let's go see what's next. Next is PBF. I know them because they're local, at least as far as I'm concerned. So they're going to be a refining company. Yeah, refining and supplying petroleum products, 2 segments, refining and logistics. Again, low sulfur, diesel, all similar, company overview to the other one. Just real quick, look at their quick grades on Seeking Alpha. And just in case you forgot, Seeking Alpha, there is a link below. That's a free trial that you cannot get through the website. I love Seeking Alpha. It's at least maybe 2/3, half the price of some of its competitors, and it gives you more information. So click that, and it helps the channel. All right, valuation A, that's probably because their PE's in the single digits. Yeah, 5 forward PE. And once again, let me go back down to the earnings. I know I'm jumping all over the place, but annual basis earnings, similar pattern, right? They had a great year. Went during that commodity spike, and people are estimating them to really come back down to earth. If it's going to be $10 a share, or I'm sorry, $6. If it's going to be $6 a share, man, it might still be undervalued. Okay, this one's another one I'm really interested in. Here's another thing. Look at this, short interest, 10%. Wow, I love seeing big short interest because to me that's shares that have to be bought back at some point, right? Okay, this one is definitely gonna get more research from me. All right, let's go back. Polished.com, POL. Okay, high risk. If it's momentum, I'm just gonna skip it. Earnings per share revisions, momentum. Okay, that's not really high risk to me. If anything, we like things that have. Holy cow! Look at this. Look, I mean, it started like IPO or whatever at like 8 or 9, climbed up to close to 14, and now we're down to 50 cents. This one is another super small market cap. Look at this, $56 million. I mean, man, so it's another very small one. There's probably not that much out there like on some of these big websites like Seeking Alpha or its competitors, but this would be one that you want to dig into the 10Q and 10K and see what's going on. It's interesting, but wait, what do they do? How did I not start with that? Polish.com operates an e-commerce platform for appliances, furniture, and home goods. All right. So what do they do? They offer household appliances. It also sells furniture. Okay. But it's all online. All right. I'm looking this up. We're going to Polish.com. All right. Look at this. Nice zoom. Oh, yeah. Kitchen. All right, what is this? We weren't always polished. What is this? What can I click on? There's nothing. I can't click on anything. Contact us? That's it? I'm so confused. I'm like half intrigued because this is like, it's like this mysterious website where there's only 2 buttons, investor relations and contact us. Okay, for my own curiosity, I'm probably going to look more into these guys, but I have no idea what's going on. Okay, let's go back to Seeking Alpha. All right, and back to the magic formula. And what's next? PBYI, Puma Biotechnology, not the shoes. This is a biotechnology company. Good grades as far as Seeking Alpha is concerned. Real quick, PE's an 8. Okay, so single-digit PE is good. Short interest, 5%, $160 million market cap. Okay. Puma Biopharmaceutical, development of products to enhance cancer care. Okay, cancer early stage. Okay, man. Okay, breast cancer. Look, pharma companies are outside of my circle of competence, but I'll just kind of look through the earnings and. Gosh, this is rough. Okay, so this is quarter, but still 3 cents a share quarterly, and we really don't have that much to go with on a yearly basis. So another new one, maybe look into it on your own. This is, like I said, it's out of my circle of competence. All right, Sideplay, SCPL, and that's one thing I want to emphasize again. It's so easy to pass on an investment just because you don't understand it, right? It doesn't mean that, you made a terrible decision if it went up, because how do I describe this? And I think this is one of the undersold points about circle of competence is that people always say, you don't want to buy something that's not in your circle of competence because what happens if it goes down, that sort of thing. But my part is What happens if it goes up? If you just bought something because your buddy told you, hey man, you need to buy this, I think it's going to be going up, and it goes up 30% the next day, how, like, do you know to sell it, or do you, like, you know nothing, right? But if you make an informed buy, then it's much easier to make an informed sell, right? If you know what's going on. So the whole circle of competence thing, I think, is important on both sides. Okay, this one at first glance, PE is a little high at 18 for like your traditional value stock, and in 1 year it's already up 40%, year to date up 20. Sideplay develops, markets, and operates social games for mobile and web platforms. Casino social games. Okay, this is another one of those, like, I put this in the pile with the tobacco company and stuff. I don't want to own these type of stocks. And it's not as much like a moral position of mine. I just feel like there's more things that can come down the road from like the government standpoint, regulation, or, social movements against these sorts of companies. Not my cup of tea. Okay. All right. Let's go to the next one. And I know what y'all are thinking who followed the channel for a long time. Like, why did you own Smith & Wesson then if you're not for those type of companies? And that is a great question that I probably should ask myself before I lost some money on Smith & Wesson. Okay, anyway, what's next? Did we skip? I feel like we skipped two. We went PBF. Did I skip PRDO and Point? I think I did. Okay, let's look at these two real quick. All right, Perdoceo. Okay, education. Let's see what they do. They provide post-secondary education through online, campus-based, and blended learning programs in the United States. Colorado Technical University and the American Intercontinental University System. What the heck? So this is like a public university. Bulls say 90% upside, estimated potential, however, contingent on a more shareholder-friendly distribution policy. No bears. Okay, we're good. There's no bears. It's going up. Just kidding. But let's look at this. How are they redistributing cash right now? So PE is about a 7. Market cap's 800 million. If I just look at their cash flow statement, let's see. First of all, are they making cash? That would be my first question. I'm gonna put latest on the right and look at yearly just because I wanna graph these. Okay, so they are making net income. Is it translating to cash? Cash from operations, okay, yeah, this is, remember, don't look at these numbers. These numbers are the 2013, so we're looking at, it's left to right for the graph to make more sense. So what the hell? Anyway, all right, so their cash from operations is a little under 200 million, let's say 175, and it's growing, but I'm sorry, it grew and then it's coming back down to earth a little bit. So 200 million like 175 in cash from operations, stock-based compensation, about 10. So less than 10%, right? Yeah, so cash from investing, they're spending money there, and then financing negative. Okay, so financing's negative. Let's go back to latest on their left and look at where this financing cash flow is going. You want financing cash flow to be negative because that's a sign that, that the company's returning some value to shareholders, right? Because they're either paying debt back, they're repurchasing stock, or they're paying dividends. That's where the financing stuff comes in. So look at them. They're repurchasing common stocks. Okay, so that's really good, right? And this is trailing 12 months. They spent 22 million. Last year, 24. 2 years ago, 31. Okay, interesting. This one's another one that's interesting to me. I've never heard of a public university type thing like this. So that's intriguing as well, but I'll look into it more. You never know. All right, magic formula. Let's continue. What was after PRDO? Point. Did we skip that one? I think we might have. 11% short interest. Man, who are these people shorting magic formula stocks, man? Don't you know? Don't you know who Joel Greenblatt is? He's got like the best returns ever. You're shorting him. Point Biopharma, another Biopharma, Global Incorporated, a radiopharmaceutical company, develops and commercializes, oh man, this is testing my reading skills, radioligands to fight cancer. Its lead product candidates include, okay, prostate-specific membrane antigen targeted. Okay, I'm done. It's a prostate cancer thing. Okay, let's see. What is their PE? PE's 9. Okay, like I said, single-digit PEs. There's a good first check, right? Just make sure that's good. Like I said, short interest is pretty high, about $1 billion market cap. And so let's see what their financials look like. Oh, we have like nothing. Okay, this is another fresh company, it looks like, because we only have data for 2022. So I'm not going to try to read into, well, I'll just look at the balance. No, I'm not even going to look at that because it's so fresh, you know. But just real quick, they have total assets of 560 million, not in a lot of debt, you know, only it's the only liabilities are the current liabilities. So you're sitting at a equity value of 470, market cap's $1 billion. Just curious, what's their cash flow looking like? Positive cash from operations, that's good. Investing in marketable and equity securities, that's not bad that they're spending money there. And then positive from issuing stock. That's it for me. You're issuing stock, I'm out, right? That's it's an easy rule of thumb. If the company's trying to sell their own stock, I don't want to be a buyer, right? Okay. Next, after Sideplay, SMLR. I'm going to skip them. I have a full video on SMLR. I will link it if I remember. Might not remember though. Okay, Skyline Champion. Skyline produces and sells factory-built housing. This is interesting to me. I don't know how many of y'all were at the Berkshire meeting, but there was a company that had like this manufactured home. I don't know if that's the right word for it, but it's one of those module homes or something like that. And it's neat. It's a neat concept where, you know, you kind of buy this house that as is and it gets delivered and set up as a module, right? And I think it's a great market, but that's because I'm part minimalist, and that's just, I really like it. PE 18. Oof. Okay, that's a little high. Market cap's $4 billion. Let's just, valuation's a B plus. Let's click on this. Their PE's 9. PE versus non-GAAP forward is 18. So their forward PE is way higher than their trailing 12 months, which means that, you know, their recent stuff or projected stuff hasn't been as good. Price to book is also 3. Wow. Okay. I mean, maybe another watch list one for me, but that's enough of that one. Okay, let's move on. After Sky, we're gonna have Unisys. $300 million market cap, negative earnings per share. That's usually enough to keep me away. Just for anybody who's paying attention, I'll just read what they do. They're an IT solutions company, digital workspace. Okay, yeah. Don't understand that, and they're losing money, so nope. X. All right, what's next? UNTC, Unit Corporation. They PE's 1. Whoa. Okay, I'm interested now. Dividend yield 5%. Is that what that is? Holy cow. Okay. What's going on here? $450 market cap. What do these guys do? Exploration, acquisition, development of oil and natural gas. All right. That is super interesting. Let's see. Now I'm kind of excited. PE of 1. What does their earnings look like? Okay, so remember this is latest on the left. So gross profit. I'm sorry, let me just go to earnings per share, make sure that it's not like a crazy something that's not consistent. I'm going to put latest on the right so I can actually graph it. All right, earnings per share. Yeah. Okay, so it was negative the last 10 years have been rough, and then you had one really good year, which, who knows, is it going to continue? That would be the $1 million question, right? Because I'll tell you what, if they make another $30 a share and selling for $47, this is the type of company that turns into, big multi-bagger. So I think it's definitely worth some of your time to at least look at them, right? At least that's what I'm going to do. All right, let's go back. Oh, no, not that back. Okay, here we go. VNDA, Vanda Pharmaceuticals. PE's 23, negative earnings. Okay. I'm not going to waste any more time. I mean, I'll tell you what they do, but I'm not looking into this one anymore. Another pharma company, commercialization of therapies to address high unmet medical needs. 24-hour sleep-wake disorders. Whoa, weird. Look at this. Ironwood. Remember them from the first video? Those of y'all who were only watching part 2, guess what Ironwood Pharmaceuticals makes? Think about it and check out part 1. Okay. Anyway, let's go back. Okay. Voyager. Not to be confused with the Voyager that went bankrupt in the crypto space. This Voyager is a biotech company focused on the treatment of gene therapy and neurology diseases. Gosh, this is rough. Company's not the company my reading, right? Anti-tau antibody program for the treatment of Alzheimer's disease. Okay. Interesting. Do we have what the bears and bulls say? Valued at $450 million. They present a high risk, high reward. I don't like high risk, high reward. I like low risk, high reward. Right? Anyway, what's their PE? PE's low enough, and then they have 10% short interest right at. So, maybe interesting if you're in the pharma space or you're interested in that sort of thing. All right. Let's look at last one. Zyme, ZYME. 3 PE. Oh, this one. I like this one so far. 21% short interest. What? Okay. This one is a candidate for something, right? Clinical stage biopharmaceutical. Another one. Discovers, develops, and commercializes biotherapeutics for the treatment of cancer. Yeah, this is completely out of circle of competence, but it feels like it could be really good, right? If 20% short interest and a 3 PE. Now it looks like the PE was just because they had this really good quarter is carrying the whole earnings up. Like, let me look at annual earnings. Yeah, they've had one up year in the last 5 years. So, and they're expected to lose money for 2023 and 2024. So. Yeah, no thank you. All right, I hope y'all enjoyed the video. Like, comment, tell me which one you thought was your favorite, which one are you looking into more, and let me know what you thought about this style video. So I'll be back later with some more detailed individual stock analysis. I just want to take a break, do something a little more relaxed. I'll see you next time.